This video is going to be a bit more personal. It's going to be free of hype. It's going to be free of music. And hello, here I am. I want to talk about my own journey that started in 2018. I want to talk about how I was able to beat just buying and holding Bitcoin. Because here's the thing, only the minority of investors are going to beat just buying and holding. The vast majority is going to buy in when prices are hyped, when there's a lot of attention on the token or on Bitcoin, etc. And only the minority of people buy low when nobody's looking and sell high when there's extreme hype and everybody is very bullish. And so this video is going to be about technical approaches. It's also going to be about mindset. And what you see over here is the long-term Bitcoin price. You've probably seen this time and time again. And I've talked about this already in the prior Bitcoin update video. Those are simply just randomly curved lines. There's nothing mathematical about them. It's simply just lines that connect the historical tops in Bitcoin pretty well, that also connect the bottoms in Bitcoin pretty well. This chart starts when Bitcoin was only at 7 cents and it goes all the way to today. And of course, those are imaginary lines. Of course, nobody can for sure say that we are going to stay within this trading range, but still it gives us somewhat of a clue that currently we are not necessarily at the best moment in time, as in the risk is probably higher compared to the potential reward. Could we break out of this? Yes, of course we could. Do we have to bounce at 118, 190k? Of course we don't have to. But a chart like this sets the frame of this video. We have to look at things as objectively as we possibly can. And we have to look at this in a way as if we were not invested in Bitcoin. Now, the very first time I bought BTC was somewhere around here. Bitcoin was at $7,000. And subsequently, the price absolutely crashed. We already went down from 20k to 7k, but still we subsequently saw a more than 50% correction. This was the miner capitulation. So this is when Bitcoin miners had to sell their BTC to shut down operations. Now let me first tell you what I did at the time and then afterwards the reasoning for my trades. Now here's what I did. I simply bought one time per month with a fixed US dollar amount. And I continued buying during this depression. I continued buying more, and then once I was above my entry position, I simply held onto my Bitcoin. I did not yet sell, but I simply just held on. We went slightly higher, we went down again. I didn't do too many trades here, and then during the COVID crash, I bought one more time. When did I sell? I sold over here at 52k. Now it's not the tippy top, but it was still a relatively good exit, especially considering that I bought all the way over here. So a return of roughly 10x. Now I'm not saying this in order to brag, I simply want to share my thought process through all of this. First of all, why did I buy when Bitcoin was at 7k? And then the even harder question, why did I continue buying after I was down 50% from the initial purchase? My thought process was the following. There's obviously a lot of volatility in Bitcoin, and it's pretty much impossible to figure out where the exact bottoms are and where the exact tops are. That's why I bought in several times. So I didn't want to deploy all my money at once because I didn't want to see all of that volatility. I wanted to tell myself some kind of a positive story, as in when the price goes down, I want to tell myself it's fine that it's down because now I can buy even more Bitcoin. I think that Bitcoin might stay on for the long term. So it's good when it goes down, I get better entry points. If Bitcoin hadn't crashed at the time, if it simply just recovered after 7k, I also could have told me a positive story because then you make money, right? You either make money or you get a better entry position. You can always tell yourself a good story when you dollar cost average in. So when you buy several times. If you do not buy several times, if you deploy all your money at once, you might have long-term potentially a better expected return, but going down by 50% with your position and simply keeping on holding is pretty tough psychologically. Most people simply give up. Now I have written a blog article at the time and I want to share this here in this video. Now here it is, published on April 14th, 2018. That's over here after I already did a few purchases and I was actually up on the position at the time. So of course I was very proud of myself of what great of an investor I was. But this article pretty well describes why I was able to continue to dollar cost average in and hold until the recovery. And I think it's somewhat of a timeless piece. So here we go. Bitcoin hated own it. Bitcoin is very opinionated. Is it the future of money? Is it a pyramid scheme? That was the big question at the time. You can read endless content. You can try to understand. You can try to form an opinion. Don't waste time on that. Your opinion does not matter. The smartest and richest people on this planet are in disagreement. So here are some very popular investors at the time. The Winklevoss twins became billionaires with Bitcoin and yet did not sell a single coin. JP Morgan CEO Jamie Dimon called Bitcoin a fraud. Peter Thiel sees Bitcoin as the digital form of gold and is invested. The richest investor alive, Warren Buffett, said that Bitcoin will end badly. And here comes a very important sentence. You, the part-time investor, have zero edge here. Now with edge, I simply mean that when all of those super skilled people are in disagreement, then it's very unlikely that you with your part-time knowledge is going to make a more informed decision, a more elaborate decision, a more refined decision. And so the thinking here is, how should we make opinions in a world where there is uncertainty? If we cannot know the outcome, then probably the best is to allocate funds and to allocate effort in relationship to how likely we think an outcome will happen. So if we think there's a 1% chance that Bitcoin can succeed long term, maybe we should allocate 1% of our funds. If we think there's a 10% chance, maybe we should allocate 10%. There's probably not a 0% chance because, again, there are some very heavyweights that do believe in Bitcoin. When the Winklevoss twins become billionaires with Bitcoin, or when Peter Thiel, that wrote 0 to 1, and that's part of the PayPal mafia, etc., when they all believe in Bitcoin, then there is a non-zero chance that Jamie Dimon, the CEO of JP Morgan, or Warren Buffett are wrong. And so here we go with the blog article. Do you think with your limited time and investment skills, you have any chance of forming a more sophisticated opinion compared to the likes of Peter Thiel? Of course you don't. And that's why you shouldn't value your opinion. There is dissent among the best. So there are very good reasons for either side. Being in the same boat with the winners is a winning strategy. The fact that some of the top people are invested in Bitcoin means that you should be as well. It does not mean that we have to be invested to the same degree as the Winklevoss twins or as Peter Thiel, but it does mean that we should maybe have a bit of an allocation, right? When there are smart people that believe in something and we don't necessarily think that our opinion is better, is more sophisticated than those smart people, then maybe just imitating the winners is already sufficient. This blog article was written a few years after I finished my master's in financial analysis in Hong Kong, and what I learned over there is that you can simply just copy trade Warren Buffett's trades in order to outperform the market, right? Warren Buffett has to announce what he's buying and selling, and there had been back tests. If you simply just bought what Warren Buffett bought at the time it was made public, you also performed better than the S&P 500. Or there had been back tests regarding insider trading, right? Insiders of a company, they have to announce whenever they buy and sell stocks, and when they sell stocks, those kind of signals aren't that useful because they might sell stocks simply because they've got some expenses coming up. But when they buy stock, that tends to be a very good signal for future outperformance. So imitating the winners, imitating the insiders that know more than us is in itself already a winning strategy. We do not have to be the most informed. We can simply just do what the most informed do as well. And so you don't need to switch careers and become a blockchain consultant. You don't need to put your retirement savings into crypto, but you don't want to miss an entire disruption. You don't want to completely ignore what has already become hundreds of billions in market value. You don't want to bet against any of the smartest people on the planet. Diversify your investments. You have no idea how Bitcoin will play out. Nobody knows. Your investments need to reflect that uncertainty. Don't gamble. Most of your investments should be property and stock. Bitcoin is young and small, and so should be your position. Take advantage of Bitcoin's high volatility. Use the cost average effect by buying a small quantity each month. If Bitcoin goes to zero, it won't hurt too much. If Bitcoin becomes the new gold, you will have participated appropriately. And so it was that kind of thinking that helped me to keep on buying Bitcoin even after a 50% drop. It's simply the question, is there some kind of probability that Bitcoin will survive this? And if there is some probability, I should have, according to that probability, an allocation as well. And again, I was not the smartest person in the room, but I saw people that were smarter than me. And when the smartest and richest people on this planet are in disagreement, I do not have any edge, and so I do not value my own opinion. Now that explains why I bought so low and why I continued buying. How did I then sell so high? Why did I actually find the exit over here? There wasn't too much math around this actually. I talked about this concept already in the prior Bitcoin video. It's titled Bitcoin is Stupid at 100K. Feel free to check it out. It got a lot of thumbs up. It got a lot of positive reviews. Again, I think that the content there is quite timeless as well. But here was my thinking when I sold that high. I already made my roughly 10x return. And at that point, I had a lot of my wealth in crypto. We all know how volatile Bitcoin can be. We all know how it can drop by 20, 30, 40, 50, 60, even 70%. And because of that potential risk, when you make a 10x and your majority of wealth is in Bitcoin, you simply want to diversify, again, with a similar thought process behind the buying. The allocation to something as risky as Bitcoin should be the target allocation. So you look at all of your entire net worth, you think about how much you have in property, how much you have in stocks, how much you have in precious metals. And does it make sense to have, say, half of your money all in Bitcoin after it has already rallied that much? If before, at those cheap prices, you bought Bitcoin only with a 5% allocation and suddenly half of your money is in Bitcoin, then it does make sense to, of course, take profit, to maybe sell half, to maybe sell more, to have somewhat of a healthy allocation again. And so I could have sold earlier. I simply just sold when we went sideways for a while, when there wasn't enough momentum anymore. I was not drawing this upper line at the time, but I simply saw how for several weeks we simply went sideways, while before we had a lot of positive momentum. And when there are no more gains for a prolonged period of time after we have come up that quickly before, that's not necessarily that pretty. Now, I want to come back to a bit more of an analytical approach, right? We only now drew random lines on charts, but there are some very interesting indicators that also help us now going forward. Now, Bitcoin moves in waves, right? It moves in trends. Sometimes everybody looks at Bitcoin, everybody searches for Bitcoin, as right now, right? Whenever we hit a new all-time high or a new milestone, everyone is interested. And then when we crash down, nobody wants to look at their portfolios, nobody wants to search for crypto, and that's actually the time to buy. Now, there are some ways to quantify trends. And a very simple approach is to use moving averages, right? So for example, over here, we've got a 52-week moving average, a 1-year moving average. And the idea is to buy whenever the momentum is positive. So when the price is above the moving average, and you want to be in the market during those kinds of times, and you want to be out of the market whenever the price is below the moving average. So we do not take any price risk during drops like this, right? Bitcoin went almost down 50% over here. So there are several approaches. There's also several ways to fine tune this. I made multiple videos on the topic as well, but I don't want to dive too deep into the math now. What I think is interesting is, can we potentially, let's say we are currently overexposed to Bitcoin, let's say we bought during the bear market when most people didn't look, we currently have a very high exposure to Bitcoin, can we find other exit opportunities besides just waiting for the drop? Because here's the problem with that strategy. It's quite nice when things are bullish, but the issue is that at some point in time we were much higher. And let's say you wait for the price to cross the moving average again, then you're still selling, in this example, 60% below the all-time high. Or let's have a look at the recent example. It's still a drop of 27%. Is there a way to actually sell close to the all-time high? To sell at similar levels as I did in April of 2021? Do we have to wait for the price to come down when we follow strategies like this, when we follow a trend following strategy? Now, if we currently have too much exposure to Bitcoin and we don't want to see a 25% drop, if that would already be too much for us to digest, in that case, we're just looking for the exit opportunities. We don't necessarily have to find the strongest of the signals. And here is one somewhat weak signal, but it is still useful. Check out the following. What we've got here at the bottom is the difference, the delta, the percentage that currently the Bitcoin price is above that moving average, above the 52-week moving average. So what we've got in red is the zero line. So this is whenever the price crossed the moving average, right over here. So we're sometimes below, sometimes we're above. Whenever this line in turquoise crosses the zero line, that's when the moving average and the price cross as well. But we also can see how much does the current price extend from the moving average. By how many X? Now, isn't this a very fascinating chart? It shows us actually two things. It first of all shows us how the extensions from the moving averages tend to decline over time because the volatility declines, because it takes more and more capital for the Bitcoin price to appreciate. So the exuberances, the hysteria, the greed tends to mute over time, but we can also see a bottoming over here. Check out this line. Once we are at 58% roughly below the moving average, we tend to have very, very good buying opportunities. Isn't that pretty impressive? Now this chart obviously suggests that we might already be heated at 100K in Bitcoin. I'm not saying that this line has to prevail because at some point it obviously will break. I do not believe that Bitcoin will very soon be forever below the 52-week moving average, right? That would mean that it will now decline forever. That's not going to happen. But it does tell us that the current rally is in line with other bull markets and that there is a chance that people take profit. I personally did. It also gives us a range of what could happen in the very worst case, right? We could go 58% below the 52-week moving average. Now, where is the 52-week moving average? It's over here. It's at roughly 63,000 US dollars, and a 58% drop would mean a price of 26,460. Now, this is wild. That's roughly over here. Now, I do not believe that we are going to fall this low, right? Because also the moving average is increasing now every day. So also this lowest point historically is increasing as well. But what I am saying is that if you're currently very highly exposed to Bitcoin because you did the right thing, you bought when most people did not want to buy, and you moved your allocation maybe from 10% of your portfolio to currently 50%, then does it really hurt to sell half of the position or even more than that? I do not know a single person that got poor by taking profit, but I do know a lot of people that became paper millionaires and that then went back to square one again. Do I believe that Bitcoin is a good long-term investment? Of course I believe this, right? This is the Bitcoin Strategy YouTube channel. I like to have a lot of allocation to Bitcoin. I do believe it's the hardest of the monies. I do believe that among the larger asset classes, it's pretty much the best expected return bet. But at the same time, I do believe in a reasonable risk exposure. I do believe that it's important not to fall down too much. And when your wealth currently relative to your income isn't yet that large, right? If you've got, say, only 3 months of income saved up and you put this all into Bitcoin, that's fine, because then you can simply just buy the bottom with that income. But if you've got 10 years of income currently with all that speculation, and say 80% of that money is in Bitcoin, then does it really make sense to lose 4 years of hard-earned income during a correction? You will not be able to buy the bottom because you went all in on Bitcoin. You could only buy this with your regular cash flow, which is relatively small to your wealth. And you've got all that ongoing stress for pretty much nothing, right? Just in order to hit the home run to maybe move from 10 years to 20 years. But is it really that much more valuable to you personally? Because think about this, the utility of money decreases over time. When you've got very little money, then you have to worry about the utility bill, you have to worry about random repairs, etc. You've got a lot of stress in your life. Once you've got a bit more money, these kinds of stresses go away. Once you've got a lot more money, then you're simply just buying luxuries with it, right? Then it's simply just about security. What is more important? Is it the difference between driving a Toyota and driving a BMW? Or is it more important to keep some wealth, not to have to stress anymore over the small bills? When you're a billionaire, having 1 billion or having 2 billion really doesn't matter for your day-to-day anymore. When you've got 20 million versus 40 million, it also doesn't change that much anymore. And my argument is simply that the utility that we gain from moving from 500k to 1 million is not as large compared to the potential loss in utility that we get when we move from 500k down to just 150, for example. That's why it makes so much sense to rebalance a portfolio. That's why it might make sense to sell the best of the monies, the best of the investments, especially when it's historically relatively high. Now, I've been able to buy Bitcoin low and sell it comparatively high repeatedly, and I've been able to ride those waves relatively well. And of course, it's not just about mindset, right? It's also about figuring out some numbers that historically worked well in the past. It's finding some technical ways to time the market better, to look at what long-term holders, etc. are doing as well. And so if your wealth is already large enough relative to your income that it justifies to take some time to learn about these kind of things, then feel free to check out the premium membership. There are a lot of tutorials in there, more than 100 100 videos on mindset, on technical analysis, on quantitative backtesting. There's a 7-minute video on the website down below, so feel free to check that out. And if you're still at the beginning of your wealth building journey, then of course feel free to also just stay over here on YouTube. Feel free to subscribe. I publish videos regularly here. Feel free to also give this a like, potentially even share this with your friends if your friends can benefit from this content.